Hi everyone, welcome to my channel. Today I want to talk about a popular strategy in investing called dividend investing. What is dividend investing? Dividend investing is a popular strategy that involves investing in stocks that pay dividends. A dividend is a payment made by a company to its shareholders, usually on a quarterly or annual basis. The idea behind dividend investing is that you can earn a regular income from your investments, even if the stock price doesn't go up. This provides a way to potentially grow your wealth over time and reach your financial goals faster. When a company makes profits, it has the option to either reinvest the money back into the business or pay it out to shareholders as dividends. Companies that consistently pay dividends are typically more established and financially stable, which can make them a good option for risk-averse investors. In addition to providing a source of regular income, dividend investing can also help diversify your portfolio and reduce risk. By investing in a mix of different stocks and industries, you can potentially mitigate the impact of any downturns in a single stock or market sector. It's important to note that not all companies pay dividends, and the amount of dividends paid can vary from year to year. As an investor, it's important to research and understand the dividend history of a company before investing in it. Additionally, it's also important to consider the company's overall financial health, growth prospects, and competition in the industry. What are the benefits of dividend investing? Dividend investing offers several benefits that make it a popular strategy among investors. These benefits include regular income. One of the primary benefits of dividend investing is the potential for a steady stream of income. Receiving regular payments from your investments can help you reach your financial goals faster and provide a sense of financial security. Lower risk. Companies that pay dividends are typically more established and financially stable, which means they are less likely to go bankrupt. This can make dividend investing a lower risk option for those who want to reduce the impact of market volatility on their portfolios. Compound interest. Reinvesting your dividends back into the stock can help you achieve compound interest over time. This means that your dividends will generate more dividends, which can lead to exponential growth in your investment over time. Diversification. Dividend investing can help diversify your portfolio by providing a source of income that is not directly tied to stock price movements. This can potentially reduce the impact of any downturns in a single stock or market sector. Higher yield. Some dividend-paying stocks can offer higher yields compared to other types of investments, such as bonds or savings accounts. This can make them a good option for those looking for a higher return on their investment. It's important to remember that the amount of dividends paid can vary from year to year, and not all companies pay dividends. As an investor, it's important to research and understand the dividend history of a company before investing in it, and to consider the overall financial health, growth prospects, and competition in the industry. How to start dividend investing? Dividend investing can be a great way to earn a steady stream of income and potentially grow your wealth over time. Here's how you can get started. Research. The first step in starting dividend investing is to research companies that pay dividends and have a history of consistently increasing their payouts. There are many online resources, such as financial websites and stock screening tools, that can help you find dividend-paying stocks. Invest in quality stocks. When choosing stocks to invest in, look for blue-chip stocks that have a history of stability and growth, and have been paying dividends for a long time. These companies are typically more established and financially stable, which can reduce the risk of investing in them. Diversify. Diversification is key in investing, and this is especially true for dividend investing. By investing in a mix of different stocks and industries, you can potentially mitigate the impact of any downturns in a single stock or market sector. Consider your investment goals. It's important to consider your investment goals and risk tolerance when starting dividend investing. If you are looking for a steady source of income, it may make sense to focus on dividend-paying stocks that have a history of consistently increasing their payouts. However, if you are willing to take on more risk for the potential of higher returns, you may want to consider investing in growth stocks that pay little or no dividends. Seek professional advice. If you are new to investing or unsure about how to start dividend investing, consider seeking the advice of a financial advisor. They can help you create a diversified portfolio that meets your investment goals and risk tolerance. By following these steps and being patient, you can potentially build a strong dividend portfolio that can provide a steady stream of income and help you reach your financial goals faster. Historical data has shown that dividend investing can be a suitable investment strategy for many investors. Over the long term, dividend-paying stocks have provided higher returns compared to non-dividend-paying stocks. For example, a study by Ned Davis Research found that from 1972 to 2019, dividend-paying stocks in the S&P 500 index outperformed non-dividend-paying stocks by an average of 2.5% per year. Additionally, dividend-paying stocks can provide a source of stability in volatile markets. During times of market uncertainty, many investors seek out dividend-paying stocks as a way to earn a steady income and reduce the impact of market volatility on their portfolios. For example, during the 2008 financial crisis, dividend-paying stocks in the S&P 500 index experienced a decline of -37%, compared to a decline of -56% for non-dividend-paying stocks. Furthermore, a study by MSCI found that over the last 40 years, companies that paid dividends had a lower likelihood of bankruptcy compared to non-dividend-paying companies. This highlights the importance of investing in companies that have a history of financial stability and are committed to returning value to shareholders through dividend payouts. In conclusion, historical data supports the idea that dividend investing can be a suitable investment strategy for many investors. By providing a source of income, stability in volatile markets, and a lower risk of bankruptcy, dividend-paying stocks can potentially offer attractive returns over the long term. Dividend investing can be a great way to earn a steady stream of income and potentially grow your wealth over time. By researching quality dividend-paying stocks, diversifying your portfolio, and considering your investment goals and risk tolerance, you can potentially create a successful dividend investment strategy. Thank you for watching this video on dividend investing. We hope that you found it informative and helpful. If you enjoyed this video, please consider subscribing to our channel to stay up to date with our latest content. We have many other informative videos on a variety of investment topics, so be sure to check out our playlist to learn more. Once again, thank you for watching and happy investing.